All right, Carl, thank you very much. Yep, welcome to the Halftime Report. I'm Scott Wapner, live from Schwab Impact. If you're an investment professional who uses the Schwab platform, chances are you're among the 5,000 people in the Colorado Convention Center over the next couple of days. A record 2,800 advisors are here as well, so it's a great place to take the pulse of the retail investor, a cohort that has helped fuel this record-setting rally. Schwab's Liz Ann Saunders will join me in just a few moments right here as well. The committee here, too, for the hour. Joe Terranova, Bryn Talkington, Shannon Sakosha, and Malcolm Bathridge. We'll go check the markets today. We are looking, of course, to bounce back some stability after the worst day in about a month. We're getting it today with the NASDAQ once again leading the way. I guess no big surprise there. Joe, I'll come to you first today. I thought it was really interesting, you know, the sell-off, the rockiness we've had, the bounce back, and this note from Tony Pasquarello of Goldman Sachs, I think sets up the conversation pretty well for us today regarding all of what we are witnessing. Yesterday's backup was harsh, he said, particularly in the most popular exposures, and it continued overnight. The tension not entirely unhealthy. I'm saying that I want to go with the Fed and with the cyclical upswing in U.S. growth and with the flow of AI capex and with the underlying flow of funds. So with a serious dose of humility and open-mindedness, I'm sticking with the plan of being responsibly bullish. Is that the responsible perspective to have about this market right now?
Oh, perfectly articulated once again by Tony, as he usually does, Scott. Look, I think where the marketplace is it's got a degree of skittishness, and the skittishness surrounds valuation. That does not mean that it changes the tailwind that exists from the secular fundamentals that Tony has identified. Those remain in place, but the skittishness around valuation means that potentially what the market begins to do is turn the battleship very slowly away from high beta, away from a lot of the high momentum names, more towards quality. And I think it's very clear over the last 4 weeks, that's the intention of the market. Healthcare beginning to outperform. You're looking at various stocks which have reported earnings and are not responding as they have in prior quarters. We'll talk later about one of those names, Axon Enterprises. So I think that's unfolding in the marketplace right now. We're turning that battleship more towards quality.
Bryn, we're in a pretty decent place, too. You know, yes, an ugly day in the market brings unease with it, but the S&P and the NASDAQ would have to fall another 2 to 3% to test their 50-day moving average. So, I mean, technically, we're in a decent spot, but I wonder what you make of this B of A flow show data, which we always cite because it gives us a good perspective on where the money's going. They saw the largest ever sales of single stocks driven by institutions last week. Near record net sellers of equities after buying the prior week. What do you think that tells you about where the psyche of the big investor is today?
Well, I mean, it shows that if you extrapolate that small data set, that they are getting more defensive. But I think the retail investors are still in charge. They got beat up a bit this week and beat up quite a bit this week with the high beta names like the Palantirs, the Rigettis, et cetera, that just got one of their legs kicked out underneath them. And so I wouldn't read too much in that institutional data because it is so short term. I think where I'm looking at to see, kind of Joe hit on it, with these really high beta, high momentum names, are they going to start petering out? Or are they going to be able to, regain that? Because some of these stocks like Ethereum, Bitmine, once again, Rigetti, all those stocks that just have been parabolic, really had some technical damage done in the past few days. And I think also on top of that single stock data point that you said, these individually levered single stocks, I mean, that's just been a complete disaster if investors were long those the last couple of days.
Yeah. Malcolm, is Tony Pasquarello correct? Just keep your eye on the ball, so to speak, of the Fed, the upswing in growth, AI capex, and where the money's flowing. And then that gives you a pretty good picture that this market's going to go higher over the next couple of months into the end of the year.
Yeah, I think Bryn just put it perfectly. Retail is still in charge. I think that maybe what we're seeing is investors are starting to get a little bit more discerning about which companies they place their bets on within the AI revolution, a la Meta selling off after earnings, a la Microsoft sort of trading flat after earnings. However, Amazon and Alphabet being positively rewarded. I think maybe what we're just seeing is the AI revolution continues to go, CapEx spending is going to be rewarded. It just depends on whether you can prove that there really is some there as far as the spending is concerned. So I'm not super concerned heading into the end of the year here.
Yeah, Shan, we're going to get to that too. That's a big story, whether we in fact did have an inflection point over the last week or so with first Meta and now Palantir, whether it relates to either spending or valuation. But I'd rather get your broad thought first on where you think we are and how you think we're set up for this stretch run of 25.
Yeah, we've got 2 months left, essentially, Scott, and those 2 months seasonally tend to be fairly strong in the equity markets. We're looking at things like equity inflows, corporate buybacks, and underlying strong fundamentals that, while valuations may seem stretched, particularly in some of the names that Bryn and Joe have already mentioned, that underlying fundamentals from an earnings perspective support some of the valuations that we see outside of those top high momentum names. The other thing that we're seeing is that, again, this reversion to companies that perhaps might represent the next phase in this AI megatrend, taking this and making these innovations applicable and actionable within their businesses. And so if we get an acceleration of companies going into 2026 that are talking about potentially integrating AI into their businesses, increasing that productivity, that creates an even stronger margin and earnings picture for 26 that can support these valuations in sectors outside of technology. Now, we're going to still continue to see volatility based on those tech trades, but I think that reasonable investors are looking at potentially reallocating from some of those larger single names into areas that can benefit from this next phase.
All right. Our headliner today is one of Schwab's superstars. She joins us now, as I mentioned. Liz Ann Saunders, Chief Investment Strategist at the firm, is here at what really is your company's Super Bowl. We said there's 5,000 people here, a record number of advisors. What's the message you're trying to get out here?
Well, first of all, welcome back to our quaint little gathering here that we have every year. I think the message is, certainly for the business of advisors, is incredibly optimistic. This is a booming part of the business. I think they're optimistic about what they are doing for their clients, for their investors, and hopefully, and I believe, the relationship with Schwab. So, but obvious. Little bit of valuation-related concerns, sentiment-related concerns. So those are the questions I'm hearing at a more micro level.
You know, it's interesting that this does come at a time where you heard some of the members of our investment committee say retail's in charge.
They sure are.
Retail has played such a huge role in this rally. From your perspective, what have you seen?
Well, first of all, I would say it's retail traders, which is maybe a subset of individual investors. The cohort that was born, that kind of grew out of the pandemic alongside sports betting and gambling, but they have become the power drivers of the market. In the aggregate, representing 25% of trading volume, and that can really spike on certain days. The one thing I worry about a little bit is that gambling mentality, and I think what we're maybe starting to see a turn in, which I think is a positive from a broader market perspective, is maybe a shift away from the ultra low quality, non-profitable, zombie micro cap stocks, and taking advantage of some of the rotation that has happened in indexes like the S&P 500 to look for opportunities that are arguably at least marginally up the quality scale.
Do you think that made the market a little more fragile, that those stocks had done particularly well, as you say, so-called high beta, low quality? You said unprofitable. I mean, in some cases, unrevenue.
Right.
Right? Do you think that made the quality of this rally a little questionable at times?
No, in fact, I would say we benefited from the fact that speculative fervor shifted from, the Mag 7, the mega cap tech AI space, into these more micro segments of the market down the quality spectrum. Good news in the sense that you can start to see a movement away from that, a bit of a washout of that sentiment, and they're not the power drivers of the market from a contribution perspective. So I think you could have some digestion there without it causing major problems for the cap-weighted indexes.
Yeah.
So it would have been worse if that speculative fervor had gone hog wild in the big mega cap names.
Yeah, well, Bryn, it hasn't gone run into that sector of the market, right? You were speaking about that earlier and even mentioning some of the names. What are your thoughts about what Liz Ann has said here?
Oh, I think she's so spot on. I like how she puts the subset of not just retail, but the retail traders. And they have, I mean, if you look at, obviously, the Metas, the Googles are up very strong this year, but they pale in comparison even to, a Palantir or a Robinhood, which I think are actually the cream of the crop of the high beta names because they actually have earnings. Free cash flow, et cetera. But I do think it's important. It does give me actually bullishness towards the end of the year to actually see some rationality come back to the market. I'm happy that I think it's healthy that Oracle has traded down since that kind of outlandish, meme thing with them and Sam Altman. I think it's like, hey, that's maybe going to happen in a few years from now. It's very positive when that speculative fervor, as she says, just gets sucked out, because we do want to have more oxygen in the room for other companies to actually get some attention. Hopefully we have retail traders, because we need them. We need that cohort to look outside of just, those type of speculative stocks that have done so well this year.
Liz Ann, this has been, in some ways, a very self-correcting market. Just like you're talking about, the areas that have gotten a little bit speculative and excessive have corrected on their own, really, without taking the rest of the market down with it.
And I think that's important, because if you just look at the period since the April 8th closing low, S&P at its recent high up 38%, but the average member within the S&P just since April 8th has had about a 17% maximum drawdown. In the case of the NASDAQ, that's more than 35%. So this churn and rotation, first of all, helps connect the dots between all the uncertainty that's out there and what the market is doing. The fuller story gets told under the surface of the cap-weighted indexes. But I think some of that churn and the weakness we've seen underneath among the soldiers, not so much the generals, actually provides an opportunity, to Bryn's point, where you actually get fundamental research happening again and looking for spots and opportunities away from just those mega cap darlings or prior darlings.
Still darlings, probably, the way that this market has judged them. Malcolm?
Yeah, I'm curious, Liz Ann, as you guys talk about speculation and some of the more volatile names that fall down in the micro cap category, if that includes the AI adjacent names, right? So in the last Stacks report, Schwab's Trading and Activity Index report, which I do follow regularly, I know it's about to come out here in November soon, so I won't ask you to front run it, but just curious if the lesser quality names that you're referring to include some of those AI adjacent names, the neo cloud names we see Microsoft doing deals with that has spiked recently, or if that's more broadly just all micro cap companies and tosses that one out or doesn't specify.
Now, I think that's a good question. When you look, I track a lot of the baskets that get to sort of these micro categories, and it is in areas that are AI adjacent. You've had a bit of a rolling over, but in baskets like drones and quantum, but also in the meme stocks, which doesn't have a fundamental theme associated with it. It's whatever is sort of the hot meme at the time. So yeah, there is still that story. AI-related story. It's just that for a while there was an attempt to find sort of a trading opportunity in less discovered areas, but it was, again, really, really down the quality spectrum.
Joe, you're kind of our resident expert on momentum.
Yes. Well, it's very clear to me that we are making a turn a little bit away from momentum. And what has really supported that has been the narrowing that we are seeing once again. So, Liz Ann, I guess the question would be, how are we to interpret the return of this concentrated market that we're seeing once again? Some will say the enemy of performance is diversification. Others will say the concentration risk is real, and it's sending an ominous message as we look into 26. How do you think about it?
Here's the way to think about concentration. First of all, if we're going to, let's pick on the Mag 7, because it's everybody's favorite thing to talk about. The best performer among the Mag 7 is NVIDIA, maybe no surprise. It's the #1 contributor to S&P cap-weighted returns. However, it's ranked 40th from a price performance standpoint, meaning there's 39 stocks in the S&P outperforming NVIDIA on a year-to-date basis. If you're an institution and you are being benchmarked against the cap-weighted S&P on a quarterly basis, you are beholden to the weight that those represent in the index. But for individual investors, I'm not talking about retail traders here, you're not benchmarked against the cap-weighted index. You don't have to take that same concentration risk and the potential downside associated with having that. They're not the best price performers. They're among the biggest contributors to performance, and I think that gets conflated at times.
I wonder also, Joe, as we look at the names that are in the most concentrated parts of the market, all the hyperscalers, for example, whether we have in fact hit an inflection point, whether we are going to scrutinize the spenders and the high valuation names, maybe more so than we have in the past. You look at what happened with Meta, obviously, was sort of the first one where you're like, okay, maybe that's a check. We'll check you here and see what you're spending and where we think the ultimate end game is going to go. And then Palantir, okay, we'll check you. We know you're a great company. We know you're doing amazing things. But we'll still check you on your valuation. And I wonder if this is the start of more of that.
I think it is. I think you're correct, Scott. I think it's two different set of circumstances, though. I think there's skepticism related to Meta. It's, okay, you're spending. Are you going to spend efficiently, or are you going to tell us in the next 18 months that you need a year of efficiency because you didn't spend efficiently? You did what you did with super intelligence and reality labs and the metaverse blow up. So I think that's more skepticism surrounding, we spend $72 billion this year, we're going to spend more next year. I think in the case of Palantir, as you correctly state, that it was a remarkable quarter. But at 85 times sales and 200 times earnings, you're calling into question if that valuation is justified at a moment where the marketplace is saying, wait a second, we are overbought. We are certainly, in terms of sentiment, bullish. I don't think that we are, this is an unloved market. And I know Tom Lee has said that, so I'll disagree on air with saying that with Tom. But I think we're at a moment where valuation is going to matter as we move forward. And I think Palantir is a great example of that. And I think there are others that you're seeing that. Look at Arista Networks. That's another name that reported today. Great earnings, but not a good reaction. Why? Valuation.
Yeah, guidance was somewhat questionable too, which is why the stock is down some 7%. Bryn, you own Palantir as well. Is this an inflection point for some of these names?
Well, I mean, I thought it was an inflection point before. So just to put some context, originally bought it at 28. So, and it was crazy multiples at that price. But then I sold some at 50, I sold some at 70 and 100. So I still have some left, but at $100, I couldn't get my arms around the valuation. So I think it's one of these unique companies, and especially a year ago, to me, it was the only true AI company out there that wasn't an NVIDIA. And so I think they'll continue to have, incredible rule of 40. They're way over that rule of 40 number. But I do think at some point people will I think it's like the hive, this retail trader, will just move on to other names. And so that to me is maybe what's happening. It's a high valuation at 100, at 200, and they move on. And so some of the oxygen, that daily oxygen, just comes out of these kind of companies. And so I think that's more of what's happening than like it's at some, why at 250 or 80 times sales, why wasn't it expensive at 60 times sales? So to me, that's hard to put my finger on versus just this retail trader hive is going to start moving on to other types of names.
Do you feel, Lizanne, like we have hit an inflection point the way we view some of these names?
I think your comment earlier was a valid one, where it's about the margin of error, and you see it throughout earnings season where it's only the mega beats that have had short-term relative outperformance to the S&P 500. The misses are getting punished disproportionately. I think we're now focused on the fact that so far this boom has been equity financed. It's now shifting to be more debt financed. Free cash flow growth for the sort of mega cap tech AI related names have gone from more than 50% to now slight negative territory for the last couple of quarters. You've got still a wide spread between the cost of capital and the return on invested capital, but the return on incremental invested capital is going down. So it's a rate of change thing that I think is being brought into the conversation.
Maybe you can throw AMD, Joe, into the mix now too, right? You know, you give guidance that, you know, meets expectations, and the market takes it down in the pre-market by more than 5%. This is a name that you just added in the rebalance. So we're going to go down the list by the days that we hear from companies reporting, and you may see a similar thing here forward.
I think you will, but I think in the case of AMD, the market's taking the other side of that. I'm on air with you. I see the chart there. It's now higher on the day. So it's living off. It's living off that OpenAI agreement, and the stock was up 58% in October. They have delivered here. I think the market appreciates that, and I think it's now welcoming them into the conversation along with NVIDIA, along with Broadcom, in delivering the needed semiconductor chips to the artificial intelligence logistical build out. So I'm happy we took the position. Obviously, we took the position based on momentum itself, but I think it's justified with what we heard today. And I think at the Analyst Day next week, you're going to hear more positive fundamentals surrounding that story.
Yeah, Lizanne, I mean, okay, 2 months left in the year, more or less. You feel like we're pretty well set up for where we can go between now and then?
Yeah, but it wouldn't surprise me to see a little bit more consolidation up the cap spectrum, but at the same time, maybe a little bit better breath under the surface. Just an environment where you see more profit taking in some of the high flyers, but money is looking for opportunity in places that haven't had that same kind of participation.
When you see something that says, you know, worst breath day ever on an up day, right? It was a week ago.
Yep.
You care about that sort of thing? Does that matter to you?
Yes, but it's none of the breadth statistics, much like valuation, they're gauges of temperature, not of timing. They don't serve as anything resembling short-term timing indicators. But I think what we may start to see that would be healthier is not up days with weak breath, but weaker days with better breath. Sort of that distribution that's exactly what we saw, in fact, in that October 2022 period of time. When we had that second big move down in the bear market, we retested and blew through the June lows, yet at the same time, breadth under the surface was improving. It wouldn't surprise me to see that as we finish out the year.
And does it even matter that we have this you know, bifurcated consumer, high end versus low end? I thought the McDonald's commentary, which they played on the program, you know, preceding ours, was pretty interesting, that they expect that weakness to persist at the lower level well into 2026. Yeah. Brian Moynihan talks about a bifurcated consumer. People just seem to be focused on what I read at the top of Tony Pasquarello's checklist, and they don't really care that that's not something important enough for the market to even worry about.
Well, I think the K-shaped nature of the economy, I would agree. I don't think that changes anytime soon. And it's not just the consumer. It's not just upper income versus low income. There's so many other bifurcations. It's obviously the AI CapEx, non-AI CapEx. It's asset owners versus non-asset owners. It's inflation at the goods versus services level. Within the goods, it's tariff-impacted goods versus non-tariff-impacted goods. I mean, the list goes on, and I think we're unlikely to see a convergence in a lot of these bifurcations as we head into next year.
All right, enjoy yourself here at your... All right, welcome back live today from Denver at Schwab Impact. Let's do some calls of the day. Uber's price target getting bumped up today, $110 from 96. It's Truist. Joe, the stock fell on earnings. They still like it, obviously.
Yeah, I think you should. It was a legal charge that I think really concerned investors yesterday, and I think the overall market environment was challenging for them to be reporting earnings on that day. But bookings growth was solid once again, above 20%. Consensus expectations going forward, and the guidance for bookings growth was 18 to 22% in the upcoming quarter. That's going to be good enough. The story about this stock the last several years has been the turn in the balance sheet and the free cash flow generation, and that was present once again. Watch Dash. They report earnings after the close today, Scott. That stock has pulled back nearly 20%. I think we're going to learn a lot about Dash after hearing from Uber as well.
Bryn, why do you think this stock has traded the way it has over the last month or so? It's had a great run, but obviously a leveling off. Is it concern about competition in Robo, Tesla, and others?
The stock just can't get above 100. 100 is like this outer Earth orbit. It cannot get above 100. And so I can talk about maybe 10 different reasons why, but I just think technically 100 is a very, very strong resistance. And I think it bounced right. I mean, it fell right off of that after earnings. And so I think as an investor, I think 100 is the upside right now, and you're going to need to get a catalyst to get it over 100. And so to me, just know that if you're taking a new position, I think you've got like $6.50 of upside until it can break out of that.
Malcolm, let's go Spotify, reiterated by UBS. They had stronger than expected results. You own the stock.
Yeah, I think Spotify is actually going through, aside from the CEO moving to a board chair position and signing 2 new CEOs, I think the company itself is going through a little bit of a remaking as they try and justify the increased cost that's happening. And they're doing a really good job right now of converting their free customers onto the paid premium subscription model. I think 30% gross margins now is what they're boasting. So it's going to take a little while for the share price to start to go back in the right direction, I think. But it is a stock that I want to continue owning here.
What about Pinterest, Joe, following earnings? That stock was lower. We can take a look at it now.
Yeah, so not every name that we add into the ETF is going to be a name that I'm applauding because it's rules-based and I don't have the discretion on it. This came in, reports earnings. There's clearly pricing pressure challenges. Look, we added it on, yes, momentum, but also a pretty strong balance sheet. I think the question here is obviously tariffs are having an effect on pricing, but also the AI effect, I think, is real here. And you have to call into question, is the business being cannibalized in a way that Adobe is being cannibalized as well because of AI?
All right, Dow's good for more than 300, as you see. Bitcoin is good for about 3% today, but what that chart clearly shows you is the volatility that has happened recently, below $100,000 for the first time in a while. It has obviously rebounded a bit, Bryn, back above that. Are there cracks in crypto here? What do you make of this?
Well, we've seen a lot's been reported about these, we'll call them original whales, who've held Bitcoin for 8-10 years, either outright selling billions worth of their Bitcoin or moving them from their private wallets to an exchange, inferring they were going to be selling those, hence they put them on the exchange. And so you have this confluence of events, it's risk off. So I mean, I think a 20% sell-off, it's somewhat mild for the space, right? Ethereum's closer to a 30% sell-off. So I don't think it's any more than just a regular sell-off, but I do think the market gets a little panicky when you have these very long-term holders, selling billions and billions that they've held on for 10 years. I think people are like, what do they know that I don't know? But I just think that's, part of the narrative of why it's weak. But I think this will once again be an opportunity for people that want to own it to be able to add to it while it's down versus adding to it a month ago when it was at an all-time high.
Joe, I think I need to get your take too. I mean, you literally just added strategy in the rebalance.
Yeah, I'm not so sure. Look, Bryn knows way more about the fundamentals of crypto than I do. We're tracking momentum, and I fear that if you're looking at momentum, maybe we showed up in the crypto universe a little bit late. At the end of the summer, we bought Coinbase. We're now down on that Coinbase. We added strategy recently. We're scanning 500 large cap U.S. companies by market cap, not by being in the S&P. Now, strategy qualifies to be in the S&P 500, but it's not in there. It's in the NASDAQ 100. So I'm a little bit troubled. I don't like, in the case of strategy, the overwhelming exposure to Bitcoin. So I'm a little bit troubled that maybe we showed up late to the crypto universe. Thankfully, we're equal weighted on our nature, so we would never get too punished. But I am concerned for sure about what I've already said. We might be late.
Yeah, because momentum can reverse at any time, as maybe and we've seen.
Absolutely. Sorry, Scott, I was stepping on your words. But absolutely, you are correct. And that's why what we are doing in this strategy is not relying solely on momentum as a single factor, because when momentum turns, you need a shock absorber. That could be quality, that could be growth, that could be equal weighting. But if momentum is turning, as it appears to be doing, if you're isolated to the single factor momentum, you're going to be in a detrimental position.
All right, we'll take a quick break. Let's do some final trades. Bryn, you're up first. What do you got?
Dell Computer. I think Supermicro's pains will be Dell's gains when earnings come out November 25th, looking for 12 and 15% revenue and earnings growth.
Okay, thank you for that. Malcolm, how about you?
Yeah, I'm going Microsoft. It's selling off again today, heading toward a 10% slide from its 52-week high. I see a buying opportunity forming.
Okay, yeah, I mean, some people are certainly talking about that on social media, the fact that the stock hasn't traded all that well. Joe T, what do you have?
Senior healthcare REIT, Scott. We own it. Welltower, good earnings. I think it moves above 200.
Okay, thank you for that. And Shannon Sakosha, last but not least.
Despite my concerns that I stated before, we actually are becoming more constructive on consumer discretionary and would use weakness in those names in the coming weeks to add to position.
All right, good stuff. Thanks, everybody. I'll see you in a couple hours on Closing Bell.
Hello, everybody. Welcome to Blue Cloud Trading. I'm George. You have stumbled upon the last segment of this video, in which I will go over a majority of the stocks that they talked about on the halftime report. We're going to do some analysis. We're going to also take a look here at the indices in a few seconds, but let me just show you, just to give you a little glimpse of what we'll talk about. We're going to start off with looking at the S&P 500, the NASDAQ, the Dow, the Russell. These are the ETFs here that represent those indices. We'll take a look at about 13 stocks and ETFs that were discussed on the halftime report. I've highlighted one of the strongest ones right there. We'll take a look at some of the Mag 7, not all of them. Tesla, Apple, Meta, Microsoft. And then we'll take a look at some of the strongest sectors. So let's get started here first. And we're going to use the Ichimoku indicator, Japanese indicator. Don't worry. There is going to be a video tutorial at the end of the video. It's about 5 minutes long, and it's going to explain how it works, how to basically understand what all these lines mean. It's a lot simpler than you think. All right, so let's get started here. We're going to first take a look at the indices, and you can see the Dow Jones up 0.48% today. Yesterday was a bad day in the markets, obviously, but today they actually recovered. You can see they're up 0.48% for the Dow. NASDAQ also moved up towards the last, between 3 p.m. and 4 p.m. The price dropped a little bit, but it was still up 0.65%. The S&P 500 moved up, and then again around 3 p.m. you can see the price dropped, but it was still up 0.37%. And the same thing here happened with the Russell 2000, which was actually up the most, 1.44%. Let's take a look at the heat map. This heat map here represents the S&P 500. Okay, and the top 500 there in the mega cap stocks, and we've got a mixture here. You can see this; it's a mixture of red and green. Nvidia was actually down 1.75, Microsoft down 1.39%, Home Depot down 2.4%, Bank of America down 2%, Annett down as well, Uber too. But a lot of the semiconductors actually recovered today. Yesterday they were all in the red pretty much. Google and Meta were up. Tesla was up 4%. Eli Lilly was up 2.09%. And it was just a mix here in the sectors. Let's take a closer look at the sectors and see how they did. Let's zoom in, and you can see that the one-day performance here that was strongest here at 1.34% was for basic materials. Communication services followed, and then consumer cyclical, 1%. There was just one losing sector, down 0.03%, not a big drop, but it was consumer defensive once again. This has been the laggard basically this entire year. All right, so let's take a look at the stocks now. We're going to do some analysis. We're going to use, like I said, the Ichimoku indicator. And let's start off first with the indices here. We're going to look at the SPY, up 0.35%. Now, yesterday we talked about how price actually dropped under the 9 period. That's the green line right there, the midpoint of the last 9 periods. But it found support at that 673.95 level based on these highs. Guess what? It held. It held. So that's positive. There's, again, higher probability we'll probably see a bounce. No guarantees, but there's just a higher probability tomorrow that we'll see the market move up again The Qs did something similar. We kind of created a nice little almost bullish engulfing type pattern here. You can see that, and we stayed above that 613, but we're still under the 9 period. In fact, if you look closely, you'll notice that price came right to it. There's a little wick right there. Price reached that high of the moving average and then dropped a little bit. The Dow Jones, same thing, right? Look at that. Isn't it interesting that it actually opened? The opening price was at exactly around the 470.38 level, and then it moved up and just stalled. Russell 2000 also moved up the most, 1.44%, but it's still holding under the moving averages, guys, the Tenkan-sen and the Kijun-sen. So I wouldn't get too overly excited, but it is a good sign that we're seeing price actually bouncing off of the cloud here. It's not breaking into it. And if that was happening, that would be a lot more bearish, obviously. The VIX actually dropped a little bit today. All right, it actually entered, well, let's see, did it enter the cloud? 1801, and the Senkospan B is 1801. It actually stopped right at the Senkospan B. The Senkospan B is that purple line, which is part of the cloud. And so that's interesting that it stalled right there. So this, I think there's still a little bit of indecision about what's going on with these markets. I don't know if you guys read a few of the news articles that came out about the Supreme Court, for example, is actually kind of, they're considering right now, they're discussing the tariffs and whether or not President Trump has the ability to be posting these types of the crazy tariffs that we've been seeing here in the markets and, well, on countries, which, by the way, are just essentially an import tax on the American people. Ultimately, you know, it's on the importing companies, and then they push the price onto us, and then everything will eventually get pretty expensive if those tariffs stay in play. Actually, there was a really cool article that I shared on my X page. So if you go to x.com, you can also find this candle pattern reference sheet on my X page right here. This is what it looks like, and this shows you how to identify the different candle patterns that I talk about on the show. And you can find that if you go to, again, so my X page is at Blue Cloud Trader. That's where you'll find me. And if you scroll down a little bit, right here under the Highlights tab, if you click on that, and then you'll see, if you keep going down, you'll find the candle pattern reference sheet. You'll also find this cheat sheet that basically shows the different stock patterns. That can be very useful. But the article, if you go to posts, and we basically move down a little bit. Here it is. Here's the article. Let's see. Yeah, Supreme Court justices express skepticism of Trump's tariff policies. I think it's an interesting one. Another article that I just posted as well. Explore this one right here, where almost half of the U.S. imports now have steep tariffs. It shows exactly in a graph. If you open up the article, let's just pop that open for a second. It's pretty interesting. So you can see how countries are being impacted by this. The European Union, there's China, in a graphic kind of way. You've got Mexico, Canada. And if you scroll down, I think it was around the bottom part. Was it in the bottom? There was another really cool chart that I found. Hold on one second. Let me see if I can find it. Yeah, here we go. So the New York Times has this thing called the tariff tracker. And if you highlight a specific country, it shows you exactly how much of a tariff they're being, getting hit with or imposed. 35% for Canada. You can see here Mexico, 25%. Ecuador, 15%. Brazil, 50%. 15% for Bolivia. It's just, and then Europe, of course, also getting hit, around 15% on average there, except for, what was that, Switzerland? Wow, 39% for Switzerland. A new rate imposed. It's just all over the place. It's very interesting. And China, 20%. Anyway, it's kind of, it's just, and it's constantly changing. It's constantly changing, so we won't know exactly what this might look like next week, honestly. Anyway, let's get back. But I thought that was interesting. FEZ, the Eurostoxx 50 ETF, bouncing off of the 6150 level, this prior support level. You can see here that it's stalling at the Kijun-sen. it's a sign of hope here. It was up 0.86%, so I think that it's got more potential here to break through if we have another bullish day tomorrow. What I don't like is with the directional movement index that the negative DI is above the positive DI, but you'll notice that the red line there, it dropped. The green line moved up. That's not a bad sign. All right, let's keep going. So now we're going to go over the stocks and some of the ETFs that they talked about on the show. Here's WELL, which actually happens to be one of the stocks that, now WELL is the ticker symbol for Well Tower, happens to be one of the stocks that's in the Blue Cloud portfolio that I basically share my entire portfolio with Blue Cloud Legend and Blue Cloud Trader level members. If you guys want to find out about that, all you need to do is just come to my page here, YouTube, Blue Cloud Trading, select next to the subscribe button, hit the join button. It's free to subscribe. Hit the notification bell if you want to get those notifications as well. Here's the join button, and then you would have to select Blue Cloud Trader or Blue Cloud Legend level member. You'll have access, okay, to those exclusive member only videos that I share with members, and there's other perks too. Okay, let's get back again. So, Well Tower, I like this one. Why? Here it is in the weekly chart. It's been obviously in a nice, strong uptrend. This is in the real estate sector. It's a REIT. I mean, look at this. This is a really pretty chart, isn't it? It goes all the way back to 2023, mid-2023 or so, when price got above the Ichimoku cloud. Right about that point. Let's see, when was that? That's exactly April 28th of 2023. Since that point, it's moved up 127.66%. Now, I'm an active trader, and this one here I added on October 27th, and it's still moving up. So I like Well Tower. And it is a stock that I had added back on October 8th. I closed out of this one here on October 30th for 9.1% profit. I did pick a good moment. By the way, I did share all this trade, of course, with members in the members only video and in the posts. Now, this one has dropped a little bit. As you can see, it's entered the Ichimoku cloud right now. So what I would basically say to people is, hold off, because it's obviously showing weakness right now. You can see that the volume is increasing as price dropped in. ADX is moving up. Negative DI is moving up. Positive DI is moving down. That's all negative right there. AVGO, Broadcom, has pulled back, and today it had a nice up day. It was up 2%, but it's still holding under the 9 period, the green line right there. So I would hold off on that one too. Here's Coinbase. Coinbase up 3.9% today, but as you can see, it's currently under the Ichimoku cloud. If you find that price is under the cloud, you really want to stay out of that stock, basically. It's in a decline. You also don't want to be adding new positions if price is under these moving averages. You want to wait for it to just pop above. You can have some more strength like it did over here and over here. Okay. And back all the way back over here. All right. And right now we are under the Kijinsen, and it looks like we've got a negative crossover here in the directional movement index. So I'd stay out of Dell for now. It also appears to be forming what looks like a, kind of like a double top pattern. You can see this high here. It kind of stalled there and then dropped. So that's not good. Robinhood. This one has been just moving sideways for a bit. You can see that it's been stuck basically in this box. It showed some strength here. It was up 4.15% today, but it doesn't look particularly exciting. The ADX has been dropping for a long time, as you can see, and so that represents momentum. So there's no momentum here, and so it's a stagnant stock at this particular time. Maybe things will change soon. This is what the weekly chart looks like. It's moving up. I did close a position of that back on October 6th for 22.1% profit that I had. Okay. IYC is the consumer services sector. I don't like this. I mean, it's an ETF, and you can see it's in a downward channel. All right. I would stay out of that one. It's inside the cloud. That is not a good thing. Stay out of that one. MSTR, MicroStrategy is just getting hammered. Since it reached these highs right here, back on, when was that? July? Yeah, around July 17th. It's dropped 44.33%. MSTR. So that one today was up 3.24%, but it's still in a very embedded downtrend, right? You can see that right there. So I would hold off on MSTR. PINS got hit today, down 21.76, another stock they talked about. You can see that was starting to show a little bit of strength, but it was still under the cloud. And as I've said before, not a good idea to be adding if you're under the cloud. Boom, drop 21%, a little more than 21%. It dropped on high volume. Where might it find support next? Well, we'd have to go back in time a little bit. Let's see if we can find that level. So right about there, around the 2375 level. How far is it from where we currently are? It's another 8% potential drop here for pins. PLTR, Palantir, that dropped 1.49%. So it was moving steadily here until November 3rd, and you can see it dropped, got under the Tenkan-sen. That was the first sign of weakness. Then the second sign is it also closed under the Kijun-sen. Now the good news is that these are both reversal candles. They're spinning tops, and then we might see a move back up, but right now I'd stay out of that one. RGTI is another stock they talked about. It's called Rigetti Computing Inc. It's in the technology sector, computer systems, which is not a bad sector, but this stock, obviously, you can see there's not a lot of positive things happening. Profit margins are negative. EBITDA is negative. Operating cash flow is negative. And, you know, it's obviously in a downtrend right now. Okay, it's been moving down. We got a lower high. Now, we haven't taken out this low yet. So that's a level of support that you should watch really closely if you happen to have a position here. The other negative thing that happened is the negative crossover of the 9 period getting under the 26 period, Kijun-sen. They call that the Tenkan-sen. There's the Kijun-sen. That's not good either. So it's a sign of weakness. What about Spotify? Under the cloud, under the 200-day. Obviously in a downward channel as well, right? Stay out of that one. Uber. Today, I mean, yesterday, it's interesting. Yesterday was an interesting day for Uber because it went from being above the cloud to getting under, then getting into the cloud, stalling at the moving averages, which is a very normal thing, right? It will always usually find some resistance once it's under the moving average. It actually opened up under the moving averages and then dropped. That's not a good sign. Okay, that's a dark cloud cover pattern right here. So if it gaps up and drops, closes within the body, it's like a dark cloud cover. So that's more likely to drop tomorrow, higher probability. Again, there's no guarantees in the stock market, but we're looking to give ourselves an edge here so that we can make better decisions. So not the time to be adding positions. Let's look at Tesla, some of the Mag 7s, and Tesla. Tesla's not in there anymore, but Tesla is stalling once again. Now it was up 4.01%. We did get a price getting back above. See, it was under the moving average there. It got back above, but once again, that trend line that I drew on a weekly chart, you can see that it's based on that candle. Whoops, give me a second. That candle right there, and you can see that shooting star, right? Price dropped. Okay, so price came right back up, and then we created that negative spinning top candle. So I drew the line to that high, go all the way across. You can see that it's stalling, keeps stalling now, right? 2 days in a row. If it can break above here and close above and break above the 488.54, then you'll have a higher probability to the upside. But as long as it stays under, it's like holding the balloon under the water. I mean, maybe it'll pop, but it could also just sink. So you never know if it pops. So we'll see what happens with Tesla. Apple is up 0.04%, and nothing major here. It didn't really move much today, right? It's been stalling a little bit. But it looks over. That's a weekly chart. Here's a daily chart. All right, holding up above the moving average. It's just, it reached a high back on October 31st, Friday, and you can see it's just been like moving sideways since. So not a lot of momentum here. The momentum is getting lost. We got Meta, which was up 1.38%, but it's been in a decline for a little while. You can see how price over here We had that lower high here. We talked about that a while back. Then an acceleration because price created another lower high and then price dropped. So now you can see how it can start that, right? And then it can drop some more, break through lows. Now it stayed under the 200-day moving average, and now it did stall at this 622.65 level that I drew. I created that yesterday. It was based on this little candle right here. You can see the little gap right there too. Okay, so right here it does seem to be stalling. It did create a what's called a gravestone doji candle. Again, that cheat sheet that I showed you at the beginning, that's on my Twitter page. You'll find that it's called gravestone doji, and that when you see price dropping, and you get a reversal candle like that, and you get a spinning top, there's a higher probability it's going to move up tomorrow. No guarantees. All right, and the other thing with Meta is that as price has been dropping here, you notice that the volume has also been declining. So that means that there are less and less people shorting this at this point. They're not going to take the chance. Notice how far away price is from the moving averages, the Tenkan-sen and the Kijun-sen. That's its equilibrium zone. And if price gets that far, it typically comes right back. Now it can move up shortly and then come right back down again and basically create a shorter leg, okay, up, and then drop some more. So it's not the time to be buying it up. We're still under the cloud. Microsoft closed under the cloud, stayed above that 50504 level based on, I think it's based on, let me find out the specific candle. Yeah, it's based on that little candle. Let me circle it so you can see it. Right there, 50504. So it closed under. It's not looking particularly healthy here. So, you know, Microsoft is not something I'd be touching at this time. All right, and then you've got the sectors. I'm going to run through these very quickly. Now, I've highlighted with a little blue flag the two strongest sectors. The rest of them, there's something wrong, technically, on either the weekly chart or the daily chart. So let's take a look at XLV. Healthcare. Yesterday, it had a blue flag as well. And today was up 0.39%. So it looks pretty good. Now it's stalling at 146.13 based on that candle. I think we might need to revise this because we have these highs right here. In fact, let me just move that right there. 146.73, 146.76 as the higher level. Okay, so now that's a level it needs to break through, okay, in my opinion, before it can continue moving up. But overall, I like healthcare compared to so many other of the sectors that you're going to see in a few moments. Price, as you can see here, is still above the cloud. All right. If I zoom out, you can see the future cloud here is not still ultra bullish yet, but the ADX is moving up. It's held up above the cloud. That's important on the weekly chart and on the daily chart. Again, I think it needs to still break above that 146.76. Here's a new contender, XLY. I added the blue flag today because it did break back above the Tenkan-sen Kijun-sen, showing some strength. It was up 1.22%. The future cloud is bullish in the daily chart. On the weekly chart, it's also bullish, but it's still, it's got to break through that 243.60 level, in my opinion. And that's based on this little candle right here. Okay. 243.60 is the high of that candle. It's been stalling there. Once we get that breakout, then you can see an expansion. Until then, I'd hold off, basically. And then you'll have hit all-time highs, too. Now, the rest of these, I'll go through them, but I'll show you how quickly, how easy it is to assess that you should stay out of all of these right now at this particular moment. XLB, under the moving averages and inside the cloud. The Junior Gold Miners ETF, up 2.8%. We're looking at a weekly chart. Let me just show you the daily. It's inside the cloud right now. All right, so it's up, but it's still under the moving averages. Oil K, the crude oil strategy, no on that one. It's under the cloud. Same copper. Miners ETF is under the moving averages, and we had a negative crossover there, but it was up 2.36. XLC is inside the cloud, so no on that one. Bitcoin showed some strength, up 3.04%. Notice where it stalled. 200-day moving average. That's that dotted yellow line. You see, that's the simple moving average, 200-day moving average. And The question is, will it break above? And if it does, where it's going to find resistance is around 61.31. The Tenkan is there. The cloud, it's got a lot of resistance. We also created a lower high here from the prior one and a lower low. So you can see that low here. You can see how price is stalling right at that low. So that's interesting. In fact, I think I will add another support, well, a level that's a resistance level, 59.31. It's that low. Okay. Let's go to SMH. That one is showing some more strength. That's a semiconductor ETF. This one is really close to popping back above. It stayed under the Tenkan, but it was up 1.91%. Here's the weekly chart. All right, so this is strong on the weekly, very strong on the daily. It just needs to break above the Tenkan, and that will get a flag tomorrow. Gold, on the other hand, needs a little more work. GLD, yes, it's still holding up on this support level, which is a really important one, 360.12. Found support at that level and moved up, came back down to it, that same exact level, and bounced. So will it continue moving up? We'll find out soon enough. Real estate, also finding some support. This one here, there's a box that I built by looking at the highs and the lows of this movement, right? You can see how price reached that high, dropped, came close to that high, dropped. Same thing here, and dropped. And over here, you can see where the initial point where the buyers stepped in and pushed the price up. All right, pushed it right back up, pushed it back up again and again. So, you know, we'll see. I mean, but it's basically there's no clear direction here, and it's evident by just looking at the cloud itself. I mean, look at the cloud. It's just all this crisscrossing that's taking place. If you see that the cloud itself just keeps on crisscrossing, and price keeps on crisscrossing above and below it, you really want to just stay out of it and wait for the price to actually break above these levels here first to show you, you know, that, hey, it's over. You know, the consolidation stage is over, and it's maybe okay now to start thinking about getting in. Silver. Oops. This one's had that little pullback. You can see that it also has been finding some support. Here's a low of 41.70. Let me make sure that's the correct amount. Yeah, 41.70. So pulled back a little bit, got above Tenkan, but we get that negative crossover. Not the time to be adding positions quite yet. Back in silver, it's still unclear where it's going to go at this point. If you look at the longer term, long chart here on the weekly chart, it is holding up above the 9 period. So this is all good. This is all a good sign. And by the way, the same thing applies with gold. Notice how gold is also stalling right at the Tenkan on the weekly chart, right? So these can certainly start to bounce again, but the daily chart's not telling us that yet. So you want to hold off. Utilities also pulling back under the moving averages. XLP under the cloud. XLK, this one has a potential of popping back up again, just like the SMH, but currently it's under the Tenkan for 2 days. Here it is on the weekly chart, looking pretty strong. So technology as a ETF, the XLK looks good. XLI also looks good on the weekly chart here. It's above the moving averages in the cloud, but on the daily chart, it's under, but it also has potential, okay? It's been stalling a lot. And I think I'm going to revise this to this high. I'm going to move it up to that level, which is 156.99. That's more relevant. And it's okay to revise your lines, because if you see that it obviously stalled at that level and never got above it, and then we got this new high, so that is more relevant than the prior highs. Does that make sense? Because it's more recent, and so that's the level that needs to be taken out, in my opinion. XLF financials is under the cloud. It's still in the downward channel. I'd stay out of that one. Energy, XLE is under the cloud. No on that. XHB is under the cloud, and it's still in. That's the home builders ETF. It's in a downward channel, right? You can see that. It's clear as day. And the idea behind cloud, the Ichimoku cloud, is just to What Ichimoku stands for is at a glance. So at a quick glance, you can see that it's not something you want to be touching, right? Wait for the strength to come in. XBI, still strong overall, right? Prices above the cloud, but these last couple of days now, it's been under the 9 period. But biotech has potential here because we created a bullish engulfing pattern, and if it can get back above the green line there and above some of these highs of like 113.20 or so, then I expect it will continue its move up. Here's the weekly chart, so I wouldn't be shocked to see it also drop a little bit. On the weekly chart, it could potentially come back and retest this level. And that could be a big drop, actually. Let me see. It's about a 5.8% drop. But right now, on the daily chart, it does look a little bit more bullish. So that's going to do it. That was it, folks. We went through all of that in a relatively short period of time. I didn't spend too much time on each one. We don't really need to, and that's the beauty of this indicator. You don't need to spend tons of time on over-analyzing your stocks. Look at the big picture. Look at it on 2 time frames, the weekly and the daily. And if you get confluence, if you get confirmation on both time frames, all right, you have a higher, basically, success ratio when it comes to your trades, in my opinion, because you're buying stocks that are in favor, that are obviously in a nice, strong uptrend, right, where there's demand. Demand is what makes everything move up, right? If there's demand for a stock, people are going to buy it. They're going to push the price up. When it falls out of favor, okay, like it did over here back in 2024, you can have big drops. That drop right there was about a 28.9% drop in 4.7 months. You don't want that. You don't want this. This is what you want right here. So stay above the clouds, and I will catch you in the next one. Stay tuned for that pre-recorded video on about the Ichimoku. If you look at the weekly chart for the SPY, I mean, we are obviously in a very strong uptrend here. Just really quickly, let me show you what we're looking at here. This is the Ichimoku indicator. It's a Japanese indicator that was basically incepted in the 1930s, late 1930s, folks. It was published in the late 1960s and then came here to the United States sometime in the 80s, I think, is when they started adopting it. And with software, imagine trying to plot this on a piece of paper. It's based on mathematical models, but imagine trying to do that before computers. So let me just briefly tell you what these lines mean. The green line is the midpoint of the last 9 periods. It's plotted right there. Not the closing price, but the midpoint. So think of each of these candles. It takes the highs and lows of the candle and then divides it by 2, finding the midpoint of each candle. So it's giving us an average, really. And the 9 is the green line is a 9 period. So it's looking at the last 9 periods. This one looks at the last 26 periods, the midpoint, and projects it right under the candle. Okay. The white line that you see right over here on the left, that's the closing price today. All right, so that's today's closing price projected 26 periods ago in a line form. Okay, there's different ways to plot price. So in this case, what we're looking for is for the white line to be above the candle 26 periods ago. And we're looking at a weekly chart, so that's 26 weeks ago. All right, there's the candle 26 weeks ago right there on May 2nd. And so when the white line is above it, it's bullish. If the white line is under, bearish. Here are some instances, for example, where the white line was under for an extended period of time when it probably didn't make sense to be adding positions at that time, okay, in the markets. I'm sure you guys remember 2022, right? It all started right there around 2022, and then it continued through, and then things started to emerge around mid-2023, and then the market started moving up. So what else is this indicator comprised of? It's the cloud itself, right? The Ichimoku cloud. And so that's comprised by taking the Senko span A is the upper line, and that takes the midpoint of these 2 moving averages. And what it does is it projects the midpoint 26 periods into the future. Very unique concept. And then the purple line is called the Senko span B. That takes the midpoint of the last 52 periods, these candles here. Instead of projecting it under the candle like it did in this case, it projects it 26 periods into the future. Cool, right? So we've got things that are plotting in the future. We've got things plotting in the past. all based on price. All right. And it helps to guide us, really. Think of it like that. It's a map, right? It's gonna give us some insights about what's transpiring at this particular moment on different time frames. We can look at this on a weekly chart. We can look at it on a daily chart. There's the daily chart right there. That's also bullish. What we want is price to be above the Tenkan-sen, the Kijun-sen, and the Cloud. Okay. And if you're wondering what Ichimoku stands for, Ichimoku stands for at a glance. So the idea is to see quickly, visually, where are we? Okay, on this chart. Very briefly, you know, if all these elements are in play, that we have a very strong uptrend. When things start falling apart and price gets under any of the moving averages or inside the cloud, then there's weakness, and we can identify how strong, you know, the weekend trend is. Thank you for watching. Appreciate all of you guys. Don't forget to hit the like, subscribe button, and click the join button, and maybe consider sharing this video with someone. And I'll catch you all in the next video.